Investment banking and equity research are two of the most in demand roles in finance. And having worked in both of these environments, here is my take on the two careers so that you can hopefully make a better call. So see, investment banking is deal driven. Okay, investment banking we can broadly categorize into capital raising and mergers and acquisitions kind of activity. If the deal flow is not nice, people are fired also. It is very, very common. Okay, you need the deal activity in order to have investment bankers on the floor. And that is how investment banking as a field is driven by deals. Equity research, on the other hand, is market driven. Okay, so if we are having a bull market where there are a lot of people who are interested to invest their money, then equity research as a field becomes very, very popular, because again it is driven by markets. So that is one small difference between equity research and investment banking, where investment banking is heavily dependent on the deal flow and equity research is driven by the markets. Now, most of you probably already know this. Investment banking is the private side of things and equity research is the public side of things, which means that there is a Chinese wall between investment banking and equity research. These two analysts cannot speak to each other, and having worked in both of these roles, I know that firms take this very, very seriously. You are not able to send the mails to the other department, you are not even able to call the other department, and many times the physical locations are also separated. So yes, there is a Chinese wall because investment banking analysts get access to a lot of sensitive information, price sensitive information, which they use for the purpose of their work. Equity research analysts, on the other hand, primarily rely on public information, the annual reports of the company, the investor presentations, the call transcripts, meetings and discussions with the management. This is what the equity research analyst relies on. So there is a very clear segmentation between equity research and investment banking. Okay, now the pay. The pay is very, very good in both of these fields. Assuming you are working in front-end IB or front-end ER, the pay is very, very good. In equity research, the bonus is very, very good. In investment banking also the bonus is good, but then it depends a lot on, the deal flow. Okay, whether you could bring in some clients, whether or not you as an individual could close certain deals or not. So in IB, the bonus can be as much as 100% to 200% of your fixed. That is not unheard of, but then again it depends on the deal flow and whether you as an analyst brought in any deals or whether you worked on any deals which actually got closed. So that is the difference, but otherwise in terms of pay, both the fields pay very, very well. Now, mobility between the two, mobility between investment banking and equity research is very, very high. I have seen a lot of IB analysts come and work into equity research, and I have seen the other way around too. So the mobility is very, very high between the two. So it is not that, today if you start in IB or 2 years down the line, you can't switch into equity research. That's not the case. You can switch, but the nuance over here is the focus on sectors. So for example, in investment banking, let's say you were working in M&A for the oil and gas team. So when you try and switch over to equity research, your adoption will be faster in the ONG team of equity research. So if you've not watched my previous videos on investment banking and equity research at Goldman Sachs and JP Morgan respectively, I've put the links in the description box. You can check out those videos. There I have explained that both of these fields are very sector driven. Okay, so if you are working in a particular sector in investment banking, then you want to transition to a related sector in equity research, that is going to be easy. If you want to transition to an unrelated sector in equity research, or if the vacancy is in an unrelated sector in equity research, then that transition will be difficult for you. Okay, exit opportunities are very, very good for both IB and DR. See, from equity research, typically people move on to the buy side. So, equity research for the buy side, it can be working in a hedge fund, working in a PMS, working in a mutual fund. So, that kind of transition is very, very common from equity research. From investment banking, people generally move on into private equity and venture capital. Again, the distinction between private markets and public markets remain. PE, VC, etc., they are all private investments. So from IB, people usually move into private equity and venture capital. And if we talk of equity research, from here people generally move into hedge funds, PMS, etc. They also rely on public information in order to trade. They don't have any sensitive internal information or deal related information. So this distinction is very much there. So simply put, in terms of exit strategy or the growth strategy, equity research typically moves on to hedge funds, PMS, mutual funds, etc. You can become a fund manager. And if I talk about investment banking trajectory goes from IB into private equity, venture capital, that kind of trajectory. So very strictly speaking, the trajectory is different, but then, like I told you, the mobility between IB and ER is very, very high. So if halfway through you feel like I probably want to try the other thing, you can do that. Again, in terms of work-life balance, this is my personal opinion, I think equity research is much more sustainable as compared to investment banking. But then again, this is my opinion, this is my experience. I have worked a lot when I was working in investment banking. Compared to that, when I was working in equity research, my work was much more stable. That is not to say that I did not have long nights, but the frequency of having those long nights was very different. In terms of skills required, yes, financial modeling is an in-demand skill for both of these fields. So for both investment banking and equity research, financial modeling is a good skill to have. It is nothing that you cannot learn on the job, but knowing how to do it before the job makes your life slightly simpler. And again, there is a distinction, because the distinction comes from the fact that equity is about public markets. It's about recommending people whether or not to buy a particular stock, whether or not to go ahead with a particular investment. So that is one side of it, where you are doing valuations of stocks. That is the equity research end of it. Investment bankers, on the other hand, they do valuation. So valuation is definitely there. But in addition, there is a lot of other work, which includes target screening, making strip profiles. And after valuation also, there is a lot of work, because your job doesn't end at valuation. In equity research, your job ends at valuation. You make your investment thesis, valuation, risks, your job is over. But in investment banking, your job does not end there. After valuation, you also have to come up with deal structuring, right? What kind of acquisition will happen? Do you recommend leveraged buyout? Do you recommend purchasing through cash? Do you recommend purchasing through equity shares? The whole merger math, merger modeling, all of those are required skills for investment banking. Okay, so if you are looking to make a career in equity research, do you need to know these things? No, it's not required. But these things are good to know if you are planning to enter the IB space. So anyway, I hope this video cleared a lot of your doubts about IB versus ER. If you have any more questions about these two fields, I have worked in these spaces. I will be happy to answer your questions. Drop them down in the comments below, and I'll see you in a separate video soon.